let's get into the news release here, because you've done a bit of drilling. You got some numbers that look good to me. But why don't you tell us about it?
Yeah, I mean, there's three key takeaways, from those drilling results. First off, in terms of the nickel resource, so we drilled off one portion, which is less than 20% of the structure that we have there, to deliver that 11th largest resource. These are the first new step-out holes. And so, from the first two step-out holes, we basically confirmed that this, we've more than doubled the strike length of what we've got already. So in terms of, resource upsize, that should give you some sense of what the scale of this resource could go. Secondly, and probably the most important point is, the first assays back from the first drill hole was the highest grade nickel intersection that we've drilled to date in that main nickel dunite area. So it was 55 meters at 0.42% nickel and with 0.2 grams per ton palladium plus platinum. And that's about 6 times what our average PGM grade is for the resource. And again, what we're drilling for is we're drilling for value, not for tons. So, what's going to make the PEA exciting and what's going to make people get excited about this project is being able to fill that mill with as much higher grade ore for the first years of the project. So, that's where we're really, zeroing in on. And then the third takeaway is, we hit this PGM zone sitting about 100 meters outside our main nickel resource and hit it consistently across several hundred meters down to 500 meters depth. And, we've hit it in 2 other places. So again, this, offset mineralization that is going to double the strike length. It's been hit in 2 separate places in the same spot, 1.2 kilometers apart from each other.
Right.
And then the other place that we targeted to drilling was 1.5 kilometers away from our last drill hole on the main intersection. And, we hit 2.7 grams per ton. So most of what we hit before was 1.5 grams per ton. This 2.7 grams, and there was actually 3 separate intervals that totaled nearly 30 meters of 1.5 gram material. There's very few PGM hits outside of South Africa. And again, most of what's in the market today has been around for a while. This is a new PGM discovery on top of what is already a large nickel discovery. So, I think that's the thing. People are pretty keen on palladium, and there's very few new palladium stories. So, I think, what's we're not going to change the name yet, but from Canada Nickel, but the palladium part is going to be a pretty important part of byproduct credit in the economics for the PEA and the scoping study.
That's fascinating. That's a sort of meaningful grades there on the PGM. But can I just come back to, and I'm sure as you drill out more, you'll tell us more about that. Yeah. Can we talk about what you mean by drilling for value? I want people to understand this, because I'm not sure I completely understand it either. The old model is drill for resource, and you're building out the size of the ore body, and that's the old way of doing things. You're trying to do things in an accelerated way, so you're trying to bring the good stuff to the fore quicker. Is that what you're doing? Is that what you mean by that?
Yeah, no, that's exactly it. I would say Australian mining companies tend to do it sort of. They tend to, build enough resource to get their mine built and they get going. In Canadian resource companies have tended to, just build out larger and larger resources, and that when at some point they'll put some economics around them, but it's all about making the resource as large as possible. We already, with the first set of drilling, we're 11th largest already. The key piece that's really going to move, and we have enough resource for a 50-year mine life. The key piece is really finding more higher grade, higher value material to be able to mine in the first few years of that mine project life. So the geophysics that we've got sort of points us to where those higher, best areas may be. And so, that's where we've been focusing our drilling, as opposed to just stepping out, on a standard basis and trying to add, as just maximizing tons for the sake of maximizing tons.
Okay, so things are going well. Share price, appreciate. It's great. Well done. The numbers starting to look good. Going to try and deliver this PEA by the end of the year. I'm assuming, therefore, COVID-19 has not drastically impact your ability to move things forward. That seems to be what I'm hearing.
Yeah, Northern Ontario. In Ontario, mining was deemed an essential business. So whereas a number of other businesses and their supporting businesses shut down, In Ontario, we were allowed to continue operating, and we were able to, the work that we're doing is still, we can still do it in a way that keeps our employees safe. And so, we've been able to continue drilling. Our assays have slowed down a little bit. That's where you'll see there's 9 holes of assays pending. But by and large, all the suppliers and support industries have been able to, to keep working safely, and we've been able to continue to move things along, which has been great.
Okay, and what's your view with regards to how all of this? Again, I'm talking about COVID-19 is going to impact the battery market. Is there going to be a slowdown before it gets, back up to what it was aiming to be before? Is there going to be an impact? Because we've had a couple of CEOs come on here and go, oh, it's absolutely devastated the supply chain. It's going to impact the way people think about these things. What's your take on it?
Yeah, so I think it's really more, well, let me talk about the battery market in general and then more metal specific. I think, in terms of, we are going to go through, several months of economic slowdown, but I think, you're going to see governments want to stimulate the economy. So, the Chinese have always done it through infrastructure projects. And if you look at the stats that are coming out over the last 6 weeks, they are, you've got, copper mills running at more than 100% of capacity right now. Iron ore prices, huge amounts of iron are now going into China. In the nickel market itself, you've seen a lot of the physical numbers improve pretty dramatically. So, I think that's going there. I think in the West, where consumer spending is the biggest driver, governments are going to, have to provide incentives or mail checks to people to help, get consumer spending to the point where the economy is going to be growing again. And again, cars as a big ticket item is something where, you're going to see government incentives show up. And again, there's a lot of discussion among politicians around sort of using this opportunity to retool or redesign their economy. So I think, a lot of those incentives are going to be geared towards, okay, we're going to give you money to buy a car, help you buy a car, but it's going to be only if you buy a clean car. So for those people who are kind of on the fence about buying one, oh, okay, if I get $1,000 from the government to do it, then I'm going to do it. So I'm not as doom and gloom in terms of, I think it is going to be pretty challenging, for the next year or two economically, but I think, the way out of this is to stimulate the economy. And so I think those incentives will come. In terms of the individual metals, the metal I feel sorry for the most, I think, is cobalt through this process, because it's got 3 whammies. If you look at cobalt sources of demand, one is alloys for the oil and gas industry, which is just, kind of took it in the teeth. The other part is for super alloys, in the aerospace sector. And so, again, airplane travel is something that's going to take a while to, fully come back. And then, you've got the EV market, which has become the, third source, which is going to be, again, a few bumps here going forward. So I think cobalt's got it the toughest. Lithium, again, you've just got so much supply sloshing around that, as we go through this low point. And, I don't think, I might be wrong, but I don't know how much lithium production has been impacted by COVID. Where we benefit from nickel is, the one of the major mining sources is mines in the Philippines, and those we're going to have to ramp up to help make up for the ore that's not coming from Indonesia anymore. But those mines have been shut for, quite a period of time, and have just been extended again. So, we're seeing ore stockpiles coming down in China pretty dramatically. And so, it is, I think that's important for investors, is to think about the COVID impact, not just on demand, but on the supply of the metal. And nickel has come out of this in pretty good shape relative to the other metals.